Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody's doing well. Interesting day, to say the least. If you guys have been in the markets this morning. Let's get right to it. As we know, so I don't know if you guys were aware, but we did have kind of a midday. We've been having kind of these little kind of algorithmic sell-offs. What caused, the other day we had that the FTX situation caused a midday sell-off. Today it was actually a missile that went into Poland from the Russians. If you're wondering why we had that little kind of momentum sell-off midday, that's what that was about. So, but all in all, we basically came up to that 40-52 distribution level that we've been talking about, pulled back about 2-3x from there. And now, after things are calming down, and it seems like it's obviously not going to cause any, or at least at least immediately, we're not going to have any further escalations. Now, obviously, if that changes overnight and things start heating up in Russia or in the European situation, then I think we could get further selling. But that's still, as we know, that's still a little bit of a black swan. They could derail all of this kind of rally that we've had over the last few weeks now. Okay, and in fact, this morning we had some favorable PPI number, and that's what launched that. You saw that big kind of spike this morning. So, but look, at the end of the day, technically, we really haven't, since we were together last Friday, post CPI surge or whatever you want to call it. We really haven't had a lot of movement. In fact, we're very close to 4,000. We broke above that 3,900 and are now been chopping around between 4,000, which was the next key level, 4,020 and 399. So we could just be in a consolidation mode going in to the holidays. We really don't have a bunch of data. We do have some retailers, Walmart. In fact, we are in Walmart option position as we speak. We put that on. It's a volatility play in Walmart. We actually were yesterday. Walmart sold off in front of the news, and then obviously today was a really strong earnings report, and so we're kind of we're still waiting for that to move higher and get some momentum to the upside to the 160 area is what the target is on that one. So, so far we're kind of a little underwater on that. Okay. But, that's typically what happens until you get that strong momentum and continuation. We got until next week on that position, so we're fine on that. And more or less, we're kind of, other than that, really, we've got not a lot going on. I'm going to do a class in about 3 hours in options. We have a pretty good, I think we have over 50 signed up. So I think that's going to be great. If you guys can still sign up for that, there's still some time. There's still 2-3 hours left. I'm going to do that at 4 Pacific. It's going to do a later class for everybody that can't make it. And so, okay. And then if you want to sign up for the newsletter or want to spend 5 days with me, go ahead and do that below. Okay. So where do we go from here? Let's just talk about the S&P. So the one thing that everybody's talking about is the 200-day moving average, right? And that comes in a little below 4,100. And everybody, the reason I think everybody's talking about it, because the last big rally we had from the June lows until the August highs actually stopped and turned right back down at that 200-day moving average. So I think that's why, kind of conditioning and so forth. I think that's why people are looking at that now. That comes in around 40.80 if you plot that on your charts. Now, you guys know I'm not really big on that conventional analysis, but we cannot ignore it because a lot of people will be looking at that. So I think that would be the next level to watch. Now, we don't have an actual distribution level per se there, but we still have to be mindful of that. And we know that lately all these big round numbers, 3,900, even 4,000, you can see we're kind of hovering around that now, has really been how those markets moving these days. So, but right now, I would just deem this a consolidation. If we break below 3950 in the S&P, then we probably fall all the way back down to 3,900. But again, with the kind of absence of any further big catalyst in terms of data points and so forth, inflation, it's going to be interesting to see how the market trades. Still, interest rates driving the narrative, no question about it. We have had bonds, calmer, and that's really, I think, helping. But now with this situation in Russia, I think if that smooths out, I think we probably have a little bit further up to go. We're actually setting up for some shorts now as the VIX starts dropping below or starts heading down into the 20s. We did get a little bit of a jump today with that Russian thing. So it's going to be once we get below 20 and we get a rally up into some of these higher levels in the S&P and the NASDAQ, I think we're going to I already have some short positions set up in some of these stocks. Okay. Similarly, the NASDAQ, we had a level 275 if you're looking at your charts, never quite got there, and also pulling back. And all in all, really, the NASDAQ's still lagging. And you notice I remember talking about this 11,715. We're almost back there again, a couple hundred points away from that. So, looks like we're going to be setting up for a lot of consolidation here going into the holidays. Remember, we got Thanksgiving next week, but it's still, market's still fairly volatile. And now, again, with this Russia situation cropping up, that could, in fact, create some more volatility. Okay, so in regards to any levels, if you pull up your chart of the NASDAQ, if you're looking at your NASDAQ, the level I'm looking to short against is up around the 12,450. You'll see that's a drop-based drop on a 4-hour chart. So that would be the first level, and then on the pullback, back down to about 11,300 or so on the NASDAQ. So those are the levels I'm looking at for our members. Russell consolidating. This is setting up for a big break between 1867 and 1905 in the Russell. I'm going to probably do some kind of a volatility play on that in IWM, because those kind of consolidation areas do set up for some really nice breakout type of opportunities going out until the new year. And so that's kind of what I'm looking at there. In terms of any levels, probably all the way up around the 2000 is really where we could be looking to aggressively short this index. And it still is the stronger of the indexes because it is small caps. But you'll notice that really didn't participate a lot today. So that is signaling that we're getting some consolidation in small caps, and the mega caps are starting to pick up some slack here. But with these big runs in Meta, and then TSM yesterday came out that Buffett, Berkshire had put on a big position in that, and so that's kind of propping up the semis and all that. But they are getting up to some levels that we're actually probably looking to short on some of these semis. They're getting pretty stretched in the short term. So we do have a short setting up in advanced micro device, and I am looking at XLE short. So we are now starting to look at some short positions via options. Okay, so That's kind of what I'm looking at there. And the Dow 34K, I mentioned that level to you guys on Friday. We actually did come up and then pull back, and now we're kind of just chopping around in here, right at that 34K. You can see that on your charts as well. So that did pull back about a little, not quite 3x. We'll see if that actually works out, but that was a level I gave you guys last Friday. So if you look at your charts, you'll see it. It's a level right before the turn there on the August highs. Okay. All right. The 30-year is starting to catch a nice bid, but still 126 is the resistance, and that coincides with TLT 100. Those are the two levels I'm looking at to position our members. Okay, so look at the 30-year T-bond contract around 126. See if it breaks out above that, and then that would in fact coincide with the 100 on the TLT, which is I talk about that quite a bit. We're not in any positions now currently in the TLT, but we will be looking to put on some more trades in that if we can get above 100 and get a pullback. So that's really and the volatility in the TLT has really come down, so it's a little bit more of a challenge to trade that because it really hasn't had a whole ton of movement lately. It's kind of been in about a 3-point range thus far. The 10-year is very critical, and that is also coming in. 114 is the level I'm looking at on the 10-year. So keep an eye on that. And if we can get past that, I think that will also support stocks. Okay. Now, in regards to the dollar seems to, the dollar did get a little bit stretched to the downside. And so now what's happening with the dollar is now it's gonna get a bounce, and it did around the 105 area. There's a support area. I talked to my members about that this morning, and you can see with the that Russia thing, dollar did pop up. If it rallies up into the 108, that would be another shorting opportunity in the dollar now that it's actually broken down. And again, looking at some of the currencies, we were looking at, I think I mentioned the euro, British pound did pull back from that 120 area. It was a pretty wide area, but the only problem is it's got some support right around 118 and change there. So we'll see how that plans out. So I'm not looking at a lot of currencies right now. Mainly the metal still. We're trying to get long the gold market here on a pullback. That seems to have broken the link or the correlation with the dollar for the moment, because you saw the dollar really rally today, and we didn't really have a severe pullback in gold or silver for that matter. So it looks like now if we do get a very strong rally, I think all the metals are going to catch up again and then start dropping really crazy, heavily. But at the moment, if you look at the chart of silver, that's kind of been chopping around. So a lot of these trades have haven't been something I'm looking at because of the the price action hasn't been really that great. We haven't really had any price extension on that. And again, copper still something on the radar. And you can see we had that big surge in copper. You look at your chart there. $4 came close to $4, which is the level I've been talking about quite a bit. And now we're getting into a lot of chop as well. Okay. Now, what was impacted today, interestingly, if you look at your chart of oil and the grain markets, when the news came out of that missile hitting Poland, you can see clearly that aside from the drop in the S&P and the NASDAQ and the equities across the board, you saw a spike in oil, right? You can, if you look at your chart, right at the same time, you saw a spike in oil that gave it back a little bit. And also the grain market's interesting. Look at wheat. Wheat had a spike, soybeans. So all the grain markets reacted positively because again, we know that all that whole region, that kind of Russia, Ukraine, that Eastern Europe is the, they call it the breadbasket of Europe. And so I think just kind of as a knee jerk, all the grain markets really spiked in fears that that situation could escalate and so forth. Interestingly, on the charts, they were, all of them were kind of at support levels, like wheat. We've been talking about wheat at $8 a bushel. Corn sitting around $6.50 a bushel, and soybeans, roughly around $14.20 came up, and now we got resistance at $14.65 on the soybeans. So very interesting as we talk about the technicals. It's kind of uncanny how when stuff happens and if like I say, if you're in a vacuum and don't have any news feed and just watch the technicals, it's uncanny how this stuff plays out, right? Oftentimes, and that seemed to be the case today. In fact, we did come up similarly on the Nasdaq, on the S&P. We did come up to that level, and we looked like this morning, right after the PPI number, looked like we were actually going to go right through it, and then kind of meandered, and then as we know, things changed midday when all that stuff started coming out. So, but all in all, with the absence of any big inflation news other than the PPI today, I think now we're heading into the holidays. Still a seasonally positive. I'm now turning my focus more into earnings situations. We've got TGT tomorrow. We've got AMAT. We've got Cisco. And there are some opportunities there. I'm setting up some opportunities there to take advantage of the volatility that ensues after the earnings. So I'm shifting kind of gears because it seems like, I don't know what's going to drive the stocks and bonds right now. But if we do get that situation heated up in Europe, there could be lots more volatility coming in as well. So that's kind of where I'm shifting my focus. Also, if we do continue higher, let's assume that things don't, kind of escalate due to the situation there in Poland. I do believe that we still have some upside, especially if bonds are just kind of calm in here. So that doesn't mean we still don't have opportunities. The dollar still seems to me like it wants to go lower. I mentioned I still believe that we're going to probably head down to 100 in the dollar. That could present opportunities. Now, just like everything else, the dollar is, nothing goes in a straight line. So it's not just going to fall off the cliff and just keep going straight to 100. It's going to have corrective moves. It's going to fall. It's going to rally a little bit. But if it continues on the trajectory that it's on right now, every rally is to be sold in the dollar until further, until things change there. And i.e., every pullback in currencies, as long as that's the case, is going to be a buying opportunity, similar with the metals and all the kind of correlated markets. Okay. So I think that's going to do it for me today. I've got a class to do later. Again, if you guys want to attend the class, it's still not too late. Just hit the link below, register. It's going to be at 4 Pacific, 7 Eastern. So I'm doing it a late class. It's going to be all about options. So if you're not kind of that comfortable with options, I simplify it very, I try to simplify it. I do very simple strategies. There's only 3 strategies I do. I only look at a couple things in the options market that are really my main focal point. So if you're interested in that, go ahead and hit the link below. Other than that, everybody, we'll see. It's going to be interesting. We'll see if anything turns, if anything dramatic happens, or if that just kind of blows away and, oh, it was an accident, and nothing really comes of it, then we go back to trading based on, some of the earnings and so forth. But we do have some big retailers. Again, TGT, I think, is the big one. We are already in Walmart. That had a really explosive move, but we still have to get about to 160 on that as well. So that's kind of what we're doing. So if nothing else, if you guys don't have any questions, comments, have a great rest of your week, everybody. Just trade on the technicals right now, because that's really all that's going on. I think in regards to, we don't really have any major catalysts. And then as we come into the holidays, maybe things are going to slow down, but you never know in this environment. Who the heck knows, right? So anyways, okay, everybody, have a great rest of your week. I'll see you on Friday. Take care. And if you need, if you want to contact me, you know where to reach me at transparenttradesolutions.com. And if not, I'll talk to you guys soon. Have a great day.